Traders, and welcome to another video review. Today is Thursday, February 15th, 2024. Let's take a look what's going on the Forex economic calendar for today. During the Asian sessions, we got data from Japan in form of the GDP of the Japan, and it misses very badly. The forecast was 0.2%. Now the actual reading was minus 0.1%, which is still better than minus 0.8 last time, but it didn't meet the expectations. Employment change and full employment change data together with the unemployment rate were published overnight from Australia. As you can see, the unemployment rate increased from 3.9% to 4.1%, which is not good at all. And the employment change decreased from minus 62,000 to 0.5 thousand, so only 500 people. Basically, data from the UK in form of the GDP, which was one of the most important data for today, completely disappointed market participants. The GDP from the UK was minus 0.2, minus 0.3, minus 0.1, while the market participants expected somewhat completely different numbers, and the GDP didn't deliver. Manufacturing production is, however, better than expected and on the same level in the UK, and the industrial production beats the expectations of minus 0.1% with the actual number of 0.6%. So it will be definitely looking at the cable later on. Trade balance data and business investment together with the labor productivity, all of this data are mixed bag, and they need a greater, closer look to see what is going on there and to draw any kind of a useful conclusions. Now, producer price index in Switzerland were published already, minus 0.5%, which is worse than a forecast of minus 0.2%. So very interesting situation here. Christine Lagarde will give a speech at 9 o'clock. And then the Eurozone at 11 o'clock will produce the trade balance, and then 2 hours later ECB Lane will give a speech as well. Then during the New York session we got another very important data release: core retail sales and the retail sales, including the import price, export price, New York Empire State Manufacturing Index, Philadelphia Fed Manufacturing Index, and initial jobless claims. All of this data are scheduled for release for 2:30. So very busy New York session ahead of us. There are some data, of course, including the industrial production, business inventories, real inventories, and Atlanta GDP Fed. All of this data will span across the later session, the evening of the New York session. We got some speeches as well from German Buba at 7 o'clock. Fed Weller will give a speech at 7:15. Reserve Bank of New Zealand Governor will give a speech at 20 to 8 o'clock. And the Fed balance sheet will be released at 10:30. It seems to be very busy day today, so please stay focused, stay vigilant. We got plenty of things to cover here. Because of the data from the UK, let's find out what's going on the cable. Let's switch to the cable 30-minute chart. As we can see, we got this very strong movement to the downside on the 30-minute chart. Right now the price is 1.2542. We are approaching the yesterday's low. Yesterday's low is located at the level of 1.2534, and we might see a deterioration lower after this level is violated. The next technical level is, of course, the pin bar low from the February 5th, located at 1.2517. So if we get there, unfortunately, that's going to be a weekly low as well. The key short-term support is still lower, as you can see. So this shallow bounce was only made for the bulls to touch the 100 periods moving average on a 4-hour chart, and then to try to deteriorate even further. So we have first bull bearish engulfing from the golden trend line, breakdown of the breakout below the short-term trend line, blue one, breakout below the support zone, now resistance, now test of the support zone, extension to the downside, test of the trend line. It looks like we are going to have extension to the downside even below the pin bar low at 1.2520. So please stay focused and stay vigilant. It looks like the British pound doesn't want to go up whatsoever. So US dollar and Japanese yen is the next market that we are going to cover because of the Japanese data. And what do we have here? Another movement to the upside. So there is no correction yet, bigger than 0.84, minus 0.84 of course. So basically we need to break below 149.83 in order to continue the down move. If we won't break below this level, then another bounce to the upside is being, of course, expected. As you can see, only a breakout below this level might set the some sort of the overbalance of price and time in place on our market, and then we can trade and draw the conclusions from this situation. However, for now, we got the local high at 150.89. If I'm correct, this is a kind of a doji-ish candle here. Do we have the doji? Yes, we have the doji on a 4-hour chart here at 140.51 and 89. Then we have the confirmation and a little bit of the extension, slight bounce, movement to the downside, slight bounce. Now we are breaking below 100 periods moving average, and we are testing the golden trend line support. So it all looks like the market is still under the bullish control. There is no doubt about it. Nevertheless, we hit extremely overbought market conditions. Now we very sharply going down. Now the RSI is 56 points, so it's very close to the level of 50, which is the neutral level. So please keep an eye on this level, keep an eye on the level of 50, because it might be the game changer for today. Okay, let's say this is the 50 level, so there is still a room to the downside. Now there is still some sort of the room towards the technical support at 149.78. So okay, let's change it to green, and it's a support right now. Nevertheless, any breakout below this technical support will definitely give us overbalance of price and time, and the next target at 148.82. So that was the outlook for the US dollar to Japanese yen. And I think we should take a look at the SP 500 index. On a 4-hour chart, we have the bearish engulfing pattern made after the all-time high was made at 5,048 points, bearish engulfing, confirmation, extension, and then down we go until the pin bar candle at 4,919 is made. 4,919 is of course the low of this nice movement. So what is the scope of this movement in terms of the price range? Where is my tool? There you go. The price range tool is showing us minus 2.5%. Well, pretty decent correction, but this is nothing special. We've seen it before. We've seen it, for example, here. Might be not that deep, but it's 1.66, or even a little bit better. It's 1.74 basically. So the difference is that this movement to the downside was made during the extremely overbought conditions were made on the 4-hour chart as well, which is why we dip below even the level of 50. So right now this level here will act as the technical support, 4,919. We have a bounce. Of course we have a bounce because we need to test 100 periods moving average located at 5,013, and this is what we are doing in the early trading right now. So any test of this level might result in another movement to the downside. Nevertheless, if we look at this chart, we can see clearly this market is developing the uptrend, and unless there is a big sudden sell-off more than 20%, we cannot say that the uptrend is completed. For now, it looks only good for the short-term traders. And last but not least, let's take a look at the Bitcoin. What is Bitcoin doing? Bitcoin hits the next target. As you can see, we hit it without any problems. 52,000 was hit. Local high, swing high, and yearly high 52,562. Right now we're consolidating this recent gains around this level. We got some pin bars here because of course the pressure from the bears is coming to the markets. Nevertheless, bravo, bravo, bravo. Next target for the bulls has been hit as anticipated. Momentum wise, it doesn't look good because momentum is strong, it's positive, the uptrend is being continued. Nevertheless, if you can see here, we can definitely judge this movement to the upside as the bearish divergence between the highs that is the market making, so the price behavior, higher highs and higher highs here, and if the momentum is not wrong, because it's getting lower, then the divergence is clear. So we are making higher highs on lower momentum. So the engagement from the bulls is not that big, and we should see some sort of the pullback very, very soon. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.